Okay. Okay. Mr. Derek, I think you will need to off your mic.
Off my mic, is it?
Yeah. Okay. I'll start in 1 minute. All right, everyone. Good evening to you all of you. So, welcome to today's U.S. market outlook, which is investing through market shift and the MAGA momentum. So, I will just go through with the brief introduction of my company, which is Phillip Capital Sanjam Berhad. So before we start, and I will just do a general disclaimer here. So the content of the online market outlook is intended to provide general information only, and it does not constitute any investment advice, recommendation, offer, or solicitation to buy or sell any investment product here. Hence, if you would like to consult any investment advice, you may contact our licensed dealer. Okay, so just a general introduction on the company itself. So about Phillip Capital Sanjam Berhad is incorporated on 7 October 1995. So it's wholly owned subsidiary of Phillip Capital Holdings Sanjam Berhad. So Phillip Capital Sanjam Berhad is actually formerly known as Phillip Futures Sanjam Berhad. So we are also one of the trading participant of Bursa Derivative Berhad and participant organization of Bursa Malaysia Security Berhad. We also one of the holder of the Capital Market Services License (CMSL). Okay, so if you were located in Malaysia, so this will be our Phillip offices nationwide. So you can look across the Malaysia. So we do have 11 Phillip Investor Center across Malaysia and from the east and west as well. So our headquarter will be on KL. So if you need any advice or whatever needs on like investment, you can just go to your nearest branch. Okay. So for our previous award winning on from Bursa Excellence Award, so the recent one would be the best overall derivative trading participant. So it would be champion for 2018 and 2019. So we did a first runner up on 2020 and 2021, and the second runner up on 2017, 2022, and 2023. So we are one of the best retail derivative trading participant for many years. I would say 6 years for first runner up, and we also one of the best institutional derivative trading participant, and yeah, we did get this award for 4 years in a row for first runner up. And we also one of the best trading participant in commodity derivative, which is champion on 2018. Okay, so this will be our global network across the whole world. So we have a network across Europe, US, and Southeast Asia, and even Asia. So if you need any, I would say, network in terms of the finance, yeah, you can just look for the dealer itself to understand more on this part. Okay, so this will be our global coverage. We have coverage on the US, which is the CME Group, CB, Chicago Board of Trade, COMEX, and NYMEX. And ICE and Eurex from Europe. We have from Japan as well, JPX and TOCOM. And our neighbor country, Singapore Exchange, and of course, a Hong Kong Exchange. And from Bursa Malaysia as well. So this will be the coverage on our products itself. Okay, so Phillip do offer one-stop solution for your trading. So you can see on our products that we are actually providing three major product futures, equity, stocks, and contract for difference. So number one, we do have index futures, agricultural futures, metal futures, and energy futures, and of course interest rate futures. And besides that, we do offer equities, also called so-called stocks. So we do offer Malaysia shares, US shares, Hong Kong shares, Singapore and Australia shares. And for CFD, we do provide Bursa, NYSE, Nasdaq, US index, and also commodities. Okay, for why do you choose us as your broker of choice? So we are one of the award-winning multi-asset broker, and we do have 24-hour broking and execution support, and we do offer advisory services to our clients, and we do offer latest market news like the daily commentary to our client, and we do offer a wide array of products. As you can see, we do cover many exchanges from our side, and we do have a free online account opening. Okay, so if you were to start as a beginner or even a new joiner, we did provide free one-to-one coaching session to all the clients, and of course free seminar and webinar that you are joining right now. And as I mentioned just now, free account opening as well. Okay, so what does it covers in the free one-to-one coaching? So we do have introduction to the futures, CFD, and stock trading itself, product knowledge, platform coaching, and the charting system. Okay, so I'll give you a 30 seconds so you can scan for our upcoming seminar and webinar. We do actually organize multiple events, so-called market outlook in physical like seminar. So you can just scan and look for your nearest upcoming events. Okay, so I'll just give a quick 20 seconds. So everyone, you can screenshot or whatever you need, then just look for it at the upcoming seminar and webinar. Just a quick reminder, it's better for everyone to actually prepare your phone to screenshot, because later we will have one surprise for everyone that attended the set webinar tonight. Okay, so I believe everyone have enough time to scan. Okay, so I will move on with the trading platform that Pte Capital offered. Okay, so number one, the futures. So our futures platform would be so-called Flip Nova 2.0. So it has over 90 technical indicators. You can buy and sell directly from the chart. So we do offer market depth trading too, local and foreign products in just one platform, live market news, and the price alert function. Okay, if you were to scan for the demo account, you can just scan right now. Okay, so just a quick one. So Philip Nova is actually collaborating with TradingView right now. So the charting that you see from our Philip Nova apps, you actually see on the same as what you can see on TradingView lah. So basically, this chart is actually from TradingView. So it has a local and foreign product in one account and 17 global exchanges, and of course 24 broking and execution support from our local broker side. Okay, so I will move on to the stocks. So our stocks platform would be Poems Global MY 2.0. So we just released 3.0 this year. Sorry, last few months. So it has cover Malaysia, US, Singapore, Hong Kong stocks. So all in one watch list lah. Second one, it would be the charting indicators, and third one will be exchange top 30 movers. Number four is the powerful stock analytic, and number five is the function of market depth. Okay, so move on to the CFD. So for Philip CFD Trader, the platform we do offer user-friendly interface. Second one will be the live charting, and third one will be price alert. Number four will be the live market price mirroring exchange. Number five will be the advanced order type. Okay, so move on to the next. Yep. So I think this is one thing to get excited for everyone here. So we will share a little bit on the promotion for everyone who attend today. Okay, so the first promotion will be trade US stock at 0.02%. So the minimum fee only USD 1.99 is a exclusive low rate, no platform fee, free live market data, and we do have weekly market call. So you can scan the QR code right now to understand more on the promotion to get more info. Yeah, I will give you 30 seconds on this. Okay, so I'll move on to the next promotion. Okay, so this is the main promotion today. So we have this Philip Bite of Luck, amazing giveaway prizes 2025. So in conjunction to all the US stocks promo, we will have the lucky draw giveaway for all the attendees today. We will have a early bird entry today from 8 p.m. to 10 p.m., which is the timing for this webinar. So you can scan this code to entry right now. You can screenshot or you can just take a picture first. You can complete the entry by today, but the exact date will start is actually 20th of January. So we decided to give a early bird entry to those who attend today. Yeah. So after 10 p.m., the entry will be closed and we will reopen again on next Monday. Yeah, so if you have time now, just try to scan and try to complete right now. Okay, I'll give you 30 seconds to scan and to try to complete it. For your information, we will be giving out Apple's products like iPhone 16, iPad, AirPods, and iWatch. If you have further question on this lucky draw, we will have arrange people to help you with the question lah. So later you can just write in the Q&A. We will follow up you on the next working day. Okay. So yeah, I think it's time to move to the next one. Okay, we do have this marketing representative incentive program. So if you have friends that are interest to open an account with us, you can actually refer them on our product and on our service, so you can get extra commission on this. Yep. So you can share our US stock promotion with your family and friends. So we refer them to open a stock trading account with us with free US market live data. So you will get an extra 100 ringgit for every account activated. Okay, I will give a 30-second on this, then we will just move on with the main activity today. Okay, yep, there goes the highlight of today. So we will move to the speaker of the day, which is Mr. Derick Tan. He's the founder of Timing and You Private Limited. He's a seasoned trader specializing in cycle analysis, so-called CA, known for accurately predicting key market events, including the 2015 oil and gold lows and the 2020 COVID-19 crash. He forecast a final US stock market surge before a year 2025 bear market. His T&Y Relative Risk Index guides high net worth individual across Southeast Asia. In 2019, Yazhou Zhoukan honored him as a World Excellent Young Leader. Yep. Without further ado, I would like to welcome Mr. Derick Tan.
Hi. Can you guys hear me clearly?
Yes,
Hello.
Mr. Derick, we are
Okay.
able to hear you.
All right. Please allow me to share my screen. Are you all looking at my slides?
If we see your slide right now.
Sorry.
Mr. Derick, you can try share again.
Yeah, share again. Are you all looking at my slide?
No.
Oh dear. Sorry, some
It's okay. It's
technical
okay.
issue. What can I do? I share again. How about now?
Okay, you go to your slide.
Yeah. Are you all looking at my slide?
Not yet. You are sharing yourself right now.
Sorry, ladies and gentlemen. Let me share screen. Sorry, I can't seem to share my slides. Or are you able to share your slide on your side?
Yeah. Okay. One moment. Let me share.
Sorry, ladies and gentlemen. Pardon us for the technical issue. So anyway, while Junhong is preparing, yeah, sorry. So the slide is probably we'll do it this way is I just say next, then Junhong is just press next, okay? Is that all right, Junhong?
Yep. Yep. Can.
Okay,
You
can.
just say next, then I will go on with the next one lah.
Okay, can. So good evening, ladies and gentlemen. Welcome to join us for this U.S. Market Outlook 2025. Today is the 15th of January. We are into the first 15 day and seems that the market doesn't look good. Or even in Malaysia, it seems that KLC is not doing well. All right, but anyway, tonight we are talking about U.S. stock market and its outlook for U.S. stock market and investing through the market shifts and the Make America Great Again momentum. All right, so uh, before I say anything, I just want to let you guys know that I'm a Singaporean. So I myself is a user of Philip. Also, Philip has been in Singapore for the last 50 years. So I've been using Philip since the very first day until now, and this year is my 26 years full time in the financial market. So this is my third bull market. I went through 3 bear market and this is my third bull market. So probably tonight I have something to share you guys about my experience because I probably have paid a lot of tuition fee for the last 26 years. All right. So okay, can next. Next. All right, disclaimer. Just now Chin Hong already mentioned already is whatever I share tonight is only my personal opinion. They are not recommendation. If you need any advice, please look for a financial license dealer, all right, which Philip has a lot in their companies. All right. So for me, what I'm going to share tonight is between short term to intermediate term. From that means I know you guys attend a lot of webinars, all this. So when I meant short term means anything less than 1 month. So it could be 1 to 2 weeks or 2 days or even intraday. Intermediate term is from 1 month to less than 1 year. All right. So tonight I'll be talking more about short to intermediate term for the US stock market for this year 2025. All right. Next. All right, so probably let's do a recap of what happened in 2024. Then some of the important events. Then I'll talk a bit about next. After that, I'll be talking a bit about what's going to happen in 2025. No, sorry, go back to the previous slide. Yeah. Then I'll talk a bit about 2025 and was one particular sector that I'm bullish about, and probably some stocks that I'll be sharing about some trading ideas, all these things. They are not recommendations, just my view and opinion. All right. Then finally, I'll show you guys one very simple method, investing method, whereby you can beat 94% of the professional fund managers out there. All right. Very simple. It's just that we need to be patient and persistent enough to do it. All right. So now let's go through 2024. So now, ladies and gentlemen, this is the chart of Federal Reserve Fund rate since the early days, 1970s, 60s until right now. So if you look at the so-called the further right end, you can see that Federal Reserve has been aggressively increasing interest rate in year 2022. You all can see, right? So very aggressive. In fact, it was the most aggressive rate hike since the 1970s and 80s. All right, because at that point CPI was about 9%. Anyway, tonight there will be a later CPI number for December coming out, so the market is going to be interesting again. All right, so after the Federal Reserve increased interest rate so aggressively, notice one thing, ladies and gentlemen. It was increased until 5.25 to 5.5%. If you look a bit to the left, it's about the same level as the Fed fund rate level in year 2000 as well as year 2007. All right, so they know that around 5.25 to 5.1 is a critical region whereby they try not to go beyond that, because that was what causes the so-called the Nasdaq bubble in year 2000 and the global financial crisis in 2008. Also, they maintain it at around 5.25 to 5.5 for some time until September last year. Federal Reserve finally decided that yes, it's time to start cutting rate. And since then until now, in September last year, one shot they minus 50 basis point, remember? Then subsequently they minus 25 basis point. So as of now, the Fed fund rate is about 4.25 to 4.5, 1 percentage point down. So that was what happened in the cutting of the interest rate. All right, so now, ladies and gentlemen, so and December, during their last so-called Fed meeting, Powell, yes, he did cut another 25 basis point, but he also mentioned that this year, 2025, is probably not going to cut so much. Initially, last year, we were thinking about maybe there are 4 cuts this year, but he seems to play that down, and this year, we probably only have 2 cuts. We're going to have another Fed meeting end of this month. In fact, during our first day of Chinese New Year, probably there may not be any cut, especially if tonight the CPI number, if it's strong again, we probably may not see any cut this month end. All right, so next. All right, so now, ladies and gentlemen, this is so-called a table whereby we look at the previous 10 rate cut by Federal Reserve. All right, if you look clearly, if you look in the bottom half of this table, you can see that there are three types of card: nomination card, normalization card, a panic card, or a recession card. You all see the lower half of the so-called this table. All right. So this time round, there wasn't any panic, there wasn't any recession, not yet. So this time around, when the Federal Reserve first cut interest rate in September last year, all right, it was not more of a normalization cut. So you can see when we have a normalization cut based on the last 10 rate cycle, 10 rate cut cycle. Let's look at the S&P performance 1 month, 3 months, 6 months, and 12 months after the first cut. You can see that for normalization cut, 1 month, 3 months, 6 months, 12 months later, S&P is in the green. All right. So this is what we expected. But one thing tend to worry me because just to let you all know, I know the market is volatile in the US stock market, but I don't think we are going into a bear market yet. My take is we're probably going to have some correction in the first quarter. Then we will enjoy a bull run. In fact, this is going to be the last year of the bull run until probably the last quarter of this year. Then it's going to be a topping process before we go into a bear market. All right, when we go into a bear market, that's probably when Federal Reserve will start to cut interest rate because of the so-called recession. All right, if you all take a look at the very bottom of this table, when we have recession cut, 1 month, 3 months, 6 months, 12 months, normally the S&P 500 historically was in the red. Also, normally when Federal Reserve cut rate when there's a recession, that means S&P will not do well. All right, but my view is, all right, we probably will have one more leg up, the last leg up in the so-called US stock market. All right, and then probably when recession hit, Federal Reserve will have to cut rate, and that will bring a bear market in the US stock market. All right, next. So now, trouble that I'm seeing is actually in the US 10-year minus 3-month Treasury yield. All right, normally in a normal market, US 10-year Treasury yield is higher than its 3-month yield. Because when you lend money out over a longer period of time of over 10 years, by right, you should collect higher interest. All right, than compared if you lend money out for a 3-month period. So normally in normal time, 10 years should be higher than 3 months. That's why when you take 10-year minus 3-month Treasury yield, it should be positive in normal time. But in abnormal time, 3-month yield will be higher than a 10-year yield. So when you take 10-year minus 3 months in abnormal time, it will be negative. All right, and that was what happened. Next, let's look at the chart of the 10-year minus 3 months. This is the chart of the 10-year minus 3 months, ladies and gentlemen. So can you look at the red circle over there? Those are the period whereby what we call yield inversion, whereby the 10-year minus 3 months is negative. That's why if you look at there's a black horizontal line, that is actually the zero line. So when you look at the 10-year minus 3-month yield curve, it go below zero. That means the 3-month yield is higher than the 10-year yield. All right. And if you look on the furthest right, you can see there's a biggest red circle, right? All right. Can you see that's what we call inversion. All right. Subsequent, if you look further to the left, you can see that there are smaller red circles, right? Notice one thing. There are so-called columns, gray column. Can you see after each red circle, there are gray columns. The gray columns are actually periods of recession. Also, you can see whenever there's so-called red circle, not immediately, but on average about 8 to 12 months later, you have period of recessions. or you can see very clearly. And right now, ladies and gentlemen, look at the biggest red circle right now. It has inverted and uninverted. So, ladies and gentlemen, if history were to repeat itself, I'm saying if history is going to repeat itself, because if you look past the past history and wherever there's so-called the inversion and uninversion, that means the red circle, it is always followed by recession. So this time round, we have cycle inversion and it has uninvert again, that means it go above zero. So if history were to repeat itself, all right, we have to be mindful that we may have a recession soon. All right, provided that this time round is not is the same lah. All right. Probably you all will say, this is only data since 1980s or 70s, or not far enough. Also, let's look at the next slide. I even collect data since 1965 until 1995. Can you see every time there's a red circle over there? That means there's an inversion and uninversion. Every time after that, there's always a gray column. That means period of recession. Can you see that? Then you say, this is only 1970 until right now. What? Okay, I go even further. Next. Next. This is the 10-year minus 3-month yield curve in the 1929. Can you see there's a red circle over here whereby the 10-year minus 3-month invert and then uninvert? And can you see the very long period of gray column? This was the Great Depression. So ladies and gentlemen, so you can see from the previous three so-called charts, whenever there's a cycle inversion and uninversion, is always followed by recession. So this time around, remember, the US 10-year minus 3-month so-called yield curve has invert and uninvert. So please bear in mind that we may, I'm not saying definitely, but if history were to repeat itself, we may be seeing a recession coming. Maybe, yeah, maybe. All right, next. So now, ladies and gentlemen, another thing we can look at will be this smooth US recession probabilities index. Or just remember, 10% is a line in the sand. In the past, whenever this smooth US recession probability index pop above 10, or it always happen just before recession begin. It has a success rate of 75% in the last 50 years. And the inventor of this recession probability index say this: 3 consecutive months above 0.8 has been a reliable signal to kick off a new recession. Also, there are two numbers, remember over here, 10% as well as 0.8. All right, so now I'm going to show you guys the latest chart of the smooth US recession probability index. Next. Also, this is the chart of the so-called smooth US recession probability index. You can see whenever there's a spike up, the blue spike up, it is always either during the period of recession, which is the gray column, or just before recession. Can you all see that? Then can you all see further to the right? No spike. Unlike what happened previously. Can you see that? All right. So now let's zoom in. Let's zoom in. Next. This is the zoom in view of this smooth US recession probability index. So can you see the October period is 1 point something. Junhong, can you see what's the number? A bit too small for me to see. October number is 1.38, is it?
Is 1.06.
Okay, can. So 1 point, that means it's above 0.8. Oh, that's October. Wait, let me see. Let me look at my slide. So October was 1.06. September last year is about 0.8. We disregard that. So October is 1.06. All right. So December is much higher than that. All right. So now that's why what I can say is, as of now, we have 2 months of above 0.8. Remember, can we go back to a previous slide? Uh, Previous, yes. So we are not in the 10% yet, but we already have 2 months of 0.8%. Also, this is something for us to observe. Smooth US recession probability index. So we will have 2 months of 0.8%. If the December data is also above 0.8, then at least according to the inventor is, because it says that 3 consecutive months above 0.8 has been a reliable signal to kick off a new recession. Also, ladies and gentlemen, apart from the 10-year minus 3 months, all right, which is showing, at least historically, whenever there's a inversion and uninversion, we may have a recession. This smooth US recession probability index is also telling us that maybe we observe 1 more month of this smooth US recession probability index. If it's another 0.8, then there's a chance that we may be entering into a recession soon. All right, maybe. But not only that, is also we need to watch the 10%. If we go beyond 10%, next, can we look at the next chart? If we go beyond 10%, we may see this probably index spike, and then we may end up in a recession. All right, next. Next. Okay, another thing I think we need to look at is, if there's a recession, I think the most obvious symptom will be a lot of people will be unemployed. The unemployment rate will be going up. All right, so the last December US unemployment number was reported or published last Friday, 4.1%. So now, ladies and gentlemen, can you see this? Look at this chart. This black line is the unemployment rate number. So last month was 4.1. All right. The blue line is actually the 36-month moving average of unemployment rate. All right. So can you see the the black line, which is the unemployment rate, has moved above its 36-month moving average. Such a development has happened 10 proud times since 1952, and every single time, it ends up in a recession. Also, ladies and gentlemen, this is something that we need to take note of. Based on this indicator, the unemployment rate has gone above its 36-month moving average. You just look at the red circle. All right. For the last previous 10 times, every time it ended up in a recession. This time around, I mean, no recession yet, right? But this is something that we need to take note of. All right. Next. Okay. Another thing is every Thursday, jobless claim will be published. Jobless claims, that means those people who are unemployed, they can go and apply for this jobless claim. Can you see the blue color line is the jobless claim. Whenever it spikes up, the so-called the red line is actually the S&P 500. Whenever it spikes up, the jobless claim spike up, it always end up either a correction in the S&P 500 or a bear market in the S&P 500. Also, after talking so much, what I'm trying to tell you is, ladies and gentlemen, all right, please, as later on after this correction is over, as we embark on the last leg of the bull run in the US stock market, all right, at the back of our mind, we should be prepared that a recession may be coming. Maybe, I'm just saying maybe, because the 10-year minus 3-month treasury yield has already inverted and uninverted. All right, and the so-called the recession probability index, we have 2 months of above 0.8. We just need 1 more month, and we need to observe it whether it go above 10%. And we need to look at the unemployment number, because as of last Friday, it has gone, above the stated 36-month moving average. And every Thursday, we need to observe this, which is tomorrow, the jobless claim. If it continue to go up like what is happening in this blue line, that means more and more people are losing their job, and this may end up in a recession. I'm not saying a recession is definitely coming, but there are signs. There are signs to ding, 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 make us worried that it is coming. But it's not here yet, ladies and gentlemen. Enjoy this bull run. After this correction, we're going to have a correction probably in the first quarter. After this correction, let's enjoy this last leg. Then before the recession hit, and then we go into a bear market. All right, next. So now, ladies and gentlemen, for this year, this guy is back, Donald Trump. All right, of course, when he's back, we have the Trump 2.0, and you want to end MAGA, right? Make America great again. All right, next. So I think one of the thing is he has some unfinished business, correct, with China. Also, if I'm Xi Jinping, I'll be very headache right now because for next 4 years, I have to deal with this very unpredictable person, which is the 47 US president. He's going to be sworn in next week, next Monday on the 20th of January. Also, he has really some unfinished business with China, and I believe what we're going to go through will be trade war 2.0, which it happened in 2018 and 2019. Then it was put on hold because of 2020 in COVID. But since he's back, Donald Trump is back, or I believe, and he already mentioned already he's going to impose tariff on China goods, right? All right, up to 60%. Wow, that is quite a bit. On China EV is 100% already. All right, next. Of course, we all know that Donald Trump, he has a very beautiful first lady, right? So now he has a first buddy called Elon Musk. All right, so Elon Musk made a very good bet, about 250 million US he so-called invested during the campaign of Donald Trump, and Donald Trump won, and now he become his first buddy. So ladies and gentlemen, this first buddy that the company that he owned, like for example Tesla, SpaceX, Starlink. SpaceX is the so-called rocket company. All right, Starlink is the satellite internet company, and he has an AI company called XAI. These are the probably few companies that we probably will need to pay attention to, because as long as this Elon Musk is in the good book of Donald Trump, as long as they don't quarrel, all right, I think probably Elon Musk or all these companies will do well going forward because of his good relationship with Donald Trump, provided that they don't fall out. All right, next. So for example, Elon Musk during the recent so-called LA fire, which is huge, right? He activated so-called his cyber truck from Tesla, all right, outfitted with Starlink, which is the so-called satellite Wi-Fi or internet to provide coverage. Also, if I'm Donald Trump, I see this, I'll be very happy. Because this richest man in this whole world, Elon Musk, is so-called tapping on his company's product like Cybertruck and Starlink terminals, or to provide so-called internet service to places probably is the Wi-Fi is being so-called damaged by the huge fire in LA. All right, next. So now, ladies and gentlemen, I don't know whether you guys can see clearly or not, but this is the so-called asset classes that the performance of different asset classes since 2011 until 2024. So let's focus on can you all see the gray rectangle over there? That is for the year 2024. All right, so for last year, the best performing asset class is actually Bitcoin. All right, but as you go down, you can see that US stocks has been the top performance for last year. All right, next. Then let's zoom in into S&P 500. Next. Look at 2023 and year 2024. Wow, 20+% for both 2023 and 2024. Of course, 2022 was a bear market, but last 2 years, all right, 2022 and 2023 was strong year, 20+%. Just to let you guys know, historically, since 1928 until right now, S&P 500 on average, the annualized return is about 10%. So last 2 years was exceptionally strong, exceptionally strong. Okay. So then what is going to happen this year, ladies and gentlemen? All right. So I actually went back to dig data. Let's look at the next slides. But before I go into that, this is the so-called forecast by different so-called broking house in US about S&P 500 outlook for 2025. All right, UBS is the least optimistic with 6,004. Can you all see? The most positive is 7,100. Also, ladies and gentlemen, my take is this is my personal opinion. All right, I'm not so optimistic until it can go to 7,000. All right, I'm looking at somewhere around 6,100 for S&P 500, around 6,150 to about 600, 6,500. All right, that means for me, I think with this later on the last leg of the bull up, we probably look at S&P between 6,150 to 6,500. All right, instead of 7,000. I'm not so optimistic. All right, because I'm mindful of what happened for the 10-year minus 3-month treasury yield. There's a possibility of recession coming. All right, so but don't worry. Even though there's a recession or the bear market coming, is probably towards the end of this year. We probably may not have a year-end rally. All right, this year. Also, that's my take. All right, next. So actually, I don't know whether you guys can see or not. So I actually went back to dig a lot of data. Then because 2023 and 2024 were two very good year with 20+% return. So I actually went back since 1950 until 2024. I go and search for the years whereby we have back-to-back 20% gain. And I look at what happened the next year. Also, if you look at the table in 1954, yes, we have a two back-to-back 20% gain in 1955, 1954 and 1955, and the next year is only 2.8% in 1956. All right. Then if you come a bit down to the 1995, 96, 97, can you see we have two strong 20% year. Then the third year was strong also. For example, 1997 was about 31%. 1998 was 26.7%, and 1999 was about 19.5%. All right. So if I were to take so-called the average of all these years, the average return based on these historical data, we should be looking at about an average return of 20% based on this historical data for the third year. The median is about 23.1%. These are the data. Also, on the surface, based on historical data, it seems that maybe this year, if history were to repeat itself, maybe we may have 20+% return again if history were to repeat itself. But I realized one thing. I went back to look at the period between 1995, 96, and 97 of the US 10-year minus 3-month treasury yield curve, which is the next chart. Next. Can you look at the period between 1995, 96, 97? There wasn't any yield inversion and uninversion. Can you see? Between 1995, 96, 97. So there wasn't any yield inversion. So there wasn't any recession. Can we go back to the previous one? So because there wasn't any recession, can we go back to the previous slide? because there wasn't any recession. That could explain why 95, 96, 97, it has three, after two 20 plus year of back-to-back year, the third year was high performance because there wasn't a recession. But this time round, remember I show you, can we go to the next slide? Look at the very big red circle. We already have the 10-year minus 3 month already invert and uninvert already. So there may be a chance of a recession coming. So that's why I'm not optimistic like all the broking house in the US about wow, S&P 500 can go to 6,005 go to 7,000. But for me, I tend to be a bit more conservative. I'm looking at probably 6,150 about to about 6,005. That's my view. All right, next. So another thing that made me not so optimistic because there's actually this December low indicator. That means which states that if the previous year December closing low of Dow Jones is taken out during the first quarter of the new year, watch out. That means this year, first quarter, within the first quarter, if the closing low is lower than the December closing low of Dow Jones in year 2023, watch out. So just to let you all know, next, the December closing low of Dow Jones in December 2023, next, was actually 42,326. Why is this December low indicator so important? Can we go back to the previous slide? Because whenever this December low indicator, that means in the first quarter, when any closing price during the first quarter is lower than the December low in the previous year. Can you see these are the data? On average, so-called the market drop about 10 negative. Can you look at the bottom? Minus 10.9%. All right, so few days ago, in fact, it's last week. Next, previous. Yeah. So the December low last year, 2023 was 42,326. So last week, Dow Jones actually, the closing low actually is below this. So another warning signal, ding, 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 ladies and gentlemen. Also, that's why that explains why I'm not so optimistic like all the US broking houses. But neither do I think the bear market is here. We probably are going through a correction right now, probably for the first quarter. All right. So next. So this is a chart of S&P 500. All right. Just to give you a bit of orientation, can you all see the red line? The raising red line is actually the 200-day moving average. The orange line is actually the 100-day moving average. So anyway, this is the chart S&P 500. Also, what I do see is, and this is my personal view only, we probably may see 500 S&P have a correction. All right, just to let you guys know, the whole of last year, S&P 500 did not have a 10% correction. Did not have. Probably this time around we may have it. I don't know. All right. So, but the thing is, if S&P 500 were to continue to weaken, which I think it may be, all right, for the first quarter, S&P 500 may have a support at the blue horizontal line over here. Can you see the first blue horizontal line, which is a resistance and support at around 5,700? That may be a strong support over there if S&P 500 were to drop to that level. All right. If this about 5,700 doesn't hold, then the next support for S&P 500 should be at this about 200-day moving average, which is a red line over there. All right. So if S&P were to drop to that level between 5,007 to about 5,500, 5,500 is about 10% from the top, from the peak, from a high, which is about 6,100. You take 10% out of it, it should be about 5,500. This 5,500 and 5,700 I believe should be a strong support if S&P were to continue weaken until it go to that level. If S&P were to go to that level, you look at the bottom of the so-called the chart, we are also probably looking at the, anyway, this is RSI. The indicator at the bottom is the monthly RSI. If S&P were to drop to 5,005 or to 5,007, we probably look at the RSI probably go into the oversold, which is anything below 30. Also, I will get worried if S&P start to go below the 200-day moving average, which is a red line. But at this point of time, I don't think we are there yet. That's why I think at this point, at least, I think we are so-called going through a correction. All right, next. So now, ladies and gentlemen, so this is the monthly view of S&P 500. All right, so if you know technical analysis, or there's this thing called a cup with handle chart pattern. All right, if I were to take the depth of this cup with handle chart pattern, or I add on to the high in 2022, we are looking at about the price objective is about 6,150, which we almost reached with the recent high, which is 6,100. All right, so if we take a Fibonacci extension of this depth of this cup with handle, we are looking, if we use a so-called 23.8% Fibonacci extension, we are looking at about 6,500. So that's why for me, all right, I'm looking at S&P after this correction to probably go through a last leg of the bull market, and probably it should end around 6,150 and between 6,150 and 6,500. That's where I think S&P so-called will hit. Then we'll go through a topping process, and then before we go into a bear market. All right. So that's my outlook for S&P 500 lah. All right. Next. So now I've talked about what happened in 2024, probably what may be happening in 2025. Let's look at some sector that we can ride on for this so-called last leg of this US bull market. And one particular sector that I'm very, very interested and very confident in this sector called AI, artificial intelligence. Next. So this is a chart. PricewaterhouseCoopers say the global GDP by 2030 could be 14% higher than today because of AI. This is equivalent to US 15.7 trillion, making it the biggest commercial opportunity in today's economy. That's roughly 6.5 times bigger than the market cap of Nvidia plus Apple plus Microsoft combined. That's more than the GDP of the economies of Japan, Germany, India, France, Canada, and UK combined. So, ladies and gentlemen, this AI industry is growing at a CAGR, that means compounded annual growth rate of 30.3%. Is, I would say, the mega trend of a generation. So please don't miss out this chance. All right, next. Next. So I think the best way to participate in the AI is probably, I wouldn't say the best way, one of the way to participate in this AI trend is through Magnificent Seven. Then what is Magnificent Seven? Next is this 7 stocks. Next, which is Apple, Microsoft. No, can we go back? Previous slide. The Magnificent Seven consists of these 7 stocks: Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, or the former Facebook, and Tesla. All right, so these 7 stocks make up the Magnificent Seven. Also, I will go through each of the chart of this so-called 7 stocks. So tonight, I'm not going to talk about fundamentals. I'm just going to talk about the technicals of these 7 companies. All right. So next. So let's look at this Magnificent 7. How have they performed in 2023 and 2024? These are the results. Look at NVIDIA. 2023, it went up 238%. Last year, it was 171%. It is a AI darling. I just want to say this, ladies and gentlemen. To me, AI, this trend is like Internet Revolution 2.0. Remember the so-called the 90s, whereby we have so-called the Internet Revolution together with the Windows 1995, Microsoft, all this, they went up a lot. Also, probably we are going through that again, but this time around it's through AI. All right, so these are the performance of the Magnificent 7 for the last 2 years. Also, now let's look at each of them individually. Next, let's look at the first. I think a lot of people are familiar with this company called Apple. Let's look at this 10-year chart next. Ladies and gentlemen, this is a 10-year chart of Apple. I just want to say this, ladies and gentlemen, we are definitely not at the beginning of this bull market, because this bull market started in so-called last quarter of 2022, October 2022. It's almost like 2 year plus already. So we are into the second half. Definitely we are in the second half of this bull market. So in this so-called the last leg up, we should be looking for strong stock to trade. You understand? Don't try to go and find cheap stock to buy already, because we are into a last leg already. When we are into a last leg, you know it's a last leg. Why are you still trying to find value? We should only try to find value when we are in a bear market. But as we go into a last leg, we should be buying strong stock. Stock that is going up and breaking new high. One of it will be actually Apple. You look at the trend. You look at their moving average. The blue line is actually this is a monthly chart. This the blue line is a 15-month moving average. The orange line is a 100-month moving average. The red line is a 200-month moving average. It's all turning up and very well gap in between. Can you see? So this is a sign of a uptrending stock. And in a so-called the last leg up, we should be participating in strong uptrending stock rather than to find stock that is downtrending. You understand what I'm trying to say? Now let's zoom in. Next slide. Let's zoom in into Apple. Yes, can you see? Apple recently has some correction because of the weakness in a general US market. So it's a good thing if people want to participate in it, because the price has dropped, the risk level has dropped. In fact, you look at the RSI below, it has gone from overbought, which is above 70. It has slowly turned down, not to oversold yet. Oversold is 30 and below. It's not there yet. But the thing is, the risk has reduced significantly. All right, so as you can see on the chart, probably the orange line, which is a 100-day moving average, may provide some so-called good support over there. If this support is broken, we are looking at a so-called support zone, which is where the 200-day moving average is. If Apple really were to drop to that level, ladies and gentlemen, the RSI will have turned so-called oversold. It will go below 30. Probably that will be a good area. Then we can participate if you are interested in Apple. Like what I say, I'm not telling you guys to go and buy all the stock that I'm going to mention. All right, I'm just giving you guys my view of how this stock may go. These are the support level that if the general US market will continue to weaken, That means Apple share may find support at the 100-day moving average. If it break the orange line, which is a 100-day moving average, it may go a bit lower towards a 200-day moving average, whereby there's a support zone over there. By then, RSI will be very oversold. Also, maybe at that point, may be a good entry price for us to ride so-called the last leg of the US stock market up. Also, this is for Apple. All right, let's look at the next Magnificent Seven, next chart, which is Microsoft. All right, we all know Microsoft, right? All right, so this is the 10-year monthly chart of Microsoft. Look, isn't it an uptrending, very nice uptrending stock? Very obvious, right? And this is the kind of stock that we want to buy. All right, next, let's zoom in into a shorter term view of Microsoft. Just like Apple, Microsoft has pulled back. All right, now is probably trying to find a support at the blue so-called slanted support line over there. Can you see? Which I connect from August last year until right now. A blue uptrending support line. There may be some support over there. If that support doesn't hold, we may see Microsoft coming down to the support zone around 400 plus, about 400 over here. If Microsoft really drop to that level, we probably will see its RSI go into oversold, which is below 30 as well. All right, so I don't know whether that will happen or not. But the thing is, if the US general market were to continue to weaken, we may see that. So if this blue so-called uptrend support, so-called support is broken, we may, I'm just saying we may just see Microsoft drop to the support zone, which is slightly above 400, around that region. If Microsoft were to drop to that level, its RSI relative strength index probably will be very oversold as well. That probably is a good region that we can look at for those who are interested in Microsoft. All right. Now, let's look at the third stock of Magnificent Seven, which is Google. Next, or what we call, Google is under Alphabet lah. Alphabet. All right. So, can we just go back to the last slide? So when you go in, I don't know how many of you guys over here you actually trade US market, but if you go into US market, there's actually two Google. One is GOOG, the other one is GOOGL. So what's the difference between GOOG and GOOGL? GOOG, that means whoever bought into GOOG, you don't have voting right. GOOGL, that means you have voting right. So depend on you lah. If you want to buy into Google, you want to have voting right, then you go and buy into Google with L behind, GOOGL. But if you just want to trade, then you can just buy into GOOG. All right. So next, let's look at the 10-year chart of Google. Same thing. Can you see it's a very nice uptrending stocks for the last 10 years. Okay, so even though there's a correction recently, look at this RSI, the bottom, the indicator, the technical indicator RSI. All right, it has not dropped to the so-called 50% level. Once if it dropped to the 50% level, now I'll start to get worried. But it's still up at the 70 plus level, which is to me a sign of bullishness. Let's zoom in into the the shorter term chart of Google. Yes, ladies and gentlemen, this is Google. It seems to be finding a support at the top horizontal blue support line there. It seems to be finding a support there, which is also where its 50-day moving average is. All right, if let's say this first support cannot tahan, we probably may see Google weaken further to the lower support, which is the blue uptrending so-called support line that I've drawn. There is also where its 100-day moving average is. All right, so ladies and gentlemen, so probably for those who are interested in Google, you can see whether the topmost horizontal blue support line, whether it can hold or not. If it cannot hold, then it got broken. The next support probably will be at the so-called the blue uptrending support line over there. All right, if Google really dropped to there, probably its RSI will also drop to below 50, closer to the oversold level. That probably may give us an even cheaper entry price. But generally, Google is a strong stock, as you can see from its RSI. Or it has not even dropped below its 50% RSI level. That shows how bullish it is right now. All right, Ken. So then let's look at the next uh, tech giant called Amazon. All right, so let's look at this 10-year chart. Next. Okay, so same thing. Look at the 10-year chart of Amazon. Yes, it has a correction in year 2022 because of it's a bear market. After that, since then, it has been going up and up and up because it itself is a strong stock. Can you see that? Now, let's go to the next slide, which is a zoom-in view of Amazon. Amazon seems to be finding support at the top, blue horizontal support line, which is where it has a double support there. Can you see the blue horizontal support line as well as the blue uptrending 50-day moving average? So there's a double support there. So we have a double support. That probably is a strong support level. But if the US market continue to weaken, if this double support doesn't hold, we may just see Microsoft come down a bit more towards the second lower blue horizontal support line, which is also where the orange line is. Then we have another double support there. Also, right, look at the bottom of this chart. The RSI is around the 50% level. So it's probably trying to find support at this the top blue horizontal support level. If this level is broken, we may see so-called Amazon drop a bit lower towards a lower blue horizontal support, which is where the orange 100-day moving average is also. If that would happen, we probably may see its RSI go down to its oversold level. So whoever interested in Amazon, probably you can, let's observe whether this top upper support can tahan or not. Doesn't tahan, I think the next very strong support should be the second lower blue horizontal support, or where the orange 100-day moving average is. All right, but same thing, Amazon show me is bullish, or even with this so-called current weakness in the stock market, US stock market, it did not drop a lot, and now it may be finding support at the so-called the top blue horizontal double support there, where its 50-day moving average is also. All right, so this is Amazon. Let's look at the fifth stock in the Magnificent Seven, which is the AI darling of 2023 and 2024, called Nvidia. All right, so recently CEO Jensen Huang just introduced the RTX Blackwell chip. All right, which they I think they're going to either they're shipping or they're going to ship very soon. Let's look at the chart of Nvidia for the last 10 years. Next. Voila. Such a beautiful trend. Can you see? Ladies and gentlemen, this is the kind of stock we should be looking at rather than a downtrending stock. This is a very nice uptrending stock. All right, so let's zoom in into Nvidia. Next slide. So this is a zooming view of Nvidia. All right, so Nvidia recently, just like the rest of Magnificent 7, it has weakened because of the US stock market correction. So it's now near to its, can you see the blue uptrending support line over here? Or is near to that support, which also have another support of the orange 100-day moving average. So there's a double support here. Okay, if the US stock market continue to deteriorate, then we may just see Nvidia drop a bit lower to the lower blue uptrending support line, which is where is 200-day, the red color 200-day moving average is also. So let's observe whether this current support it can tahan or not. If cannot tahan, we may see so-called Nvidia drop a bit lower towards the lower blue uptrending support line and is red 200-day moving average. So for those who are interested in Nvidia, if you still think that Nvidia is going to do well because of this AI mega trend, which if you ask me personally, between Nvidia and AMD, Nvidia is way ahead of AMD. So if I'm to choose, I'll probably choose Nvidia over AMD. That's my view. All right. Also, ladies and gentlemen, watch out for Nvidia. Let's see this top upper blue horizontal support line can hold or not. If it doesn't hold, it may have a chance to drop to the lower blue uptrending support line, which is where is 200-day moving average also. If that happens, then probably there's another lower entry price for those who are interested in buying Nvidia. All right. So next, let's look at the next. Yeah, it's called Meta, which is a former Facebook. You own Facebook, Instagram, WhatsApp, and Messenger. Let's look at the 10-year chart of Meta, ladies and gentlemen. Next. After quite a drastic correction in year 2022, because Mark Zuckerberg go and change the name of Facebook to Meta. All right, because he pumping a lot of money into Metaverse. Remember those days? Because of that, Meta dropped quite a fair bit. But since then, it has picked up itself and go up and up and up, because I think it's seeing a lot of results from its AI effort. For example, it has its Meta AI, which help in their so-called the sales and help in their customer sale because of Meta AI. Also, this is a 10-year view. Let's zoom in into the shorter term view of Meta. Next. Also, as you all can see, Meta is also so-called weakening right now. All right, it may just weaken towards the top blue uptrending support line over here. That is the next support. Can you see the top blue uptrending support line? Meta may drop to that level, which is where is 100-day moving average support is also. So, but if the US market continue to weaken, we may see a drop further to the lower blue uptrending support line, or where the is a 200-day moving average, which is the red line over here. There's a double support over there, about 530. Also, watch out for it. If the US market continue to weaken, we may see MAGA come to test its first upper so-called uptrending support line. If that doesn't hold, or we may see it drop a bit lower towards its 200-day moving average. And if that happens, MAGA for its RSI may go into its so-called lower into its oversold condition, which is that means less than 30. It may give us a chance to so-called enter MAGA at a much lower price. But generally, can you see its 200-day and its 100-day moving average is still uptrending. Very nice. So to me, MAGA is still in a bullish mode. It's just as it's going through a correction right now. All right. So this is MAGA. Next. Finally, I mentioned right earlier, we have the first buddy of Donald Trump, which is Elon Musk. So this is his company called Tesla. All right. Let's look at the 10-year view of Tesla. Next. Also, this is a 10-year money chart of Tesla. It just recently broke out from this base. All right, just let's zoom in into a shorter term view of Tesla next. Next. Also, ladies and gentlemen, lately Tesla, I mean, it has since November, it has keep on running, correct? So until probably middle of December, it has start to weaken. So can you see the top blue horizontal support line, which is where its 50-day moving average is also? That double support should act like a good support for Tesla. Or the top blue horizontal support line, which is where its 50-day moving average is. This double support should act as a good floor for Tesla price. But if that first double support cannot hold, we may see Tesla drop a bit lower towards the second lower blue horizontal support, which is where its orange 100-day moving average is. Also, for the RSI of Tesla is around 50. So if Tesla prices continue to weaken, we may see its RSI go below 30, and at that point it may be oversold. Also, let's watch out for Tesla. Like what I say, a strong support may be around the top upper horizontal blue horizontal support line, where its 50-day moving average is also. All right, but like what I mentioned earlier, because he's the first buddy, so whatever his company called Tesla, or even his XAI, or even Starlink or SpaceX, probably is what we should pay attention to, especially if SpaceX or Starlink go IPO. It may be the biggest IPO this year, if it go IPO this year. All right, because I think Starlink has already turned profitable. All right, so we may have a so-called IPO of Starlink or even SpaceX this year. If that happen, it's going to be, I can't say the biggest, probably one of the biggest IPO this year. All right, so this for Tesla. Next. Maybe some of you guys will say, Derick, I don't have so much money to go and buy Apple, Microsoft, Google, Amazon, Nvidia, Meta, and Tesla. Too much money I don't have. Never mind, ladies and gentlemen. There's a very easy way to participate in 7 of them. There's this ETF called Round Hill Magnificent 7 ETF. The ticker symbol is MAGS. Or is available in Philip platform. All right. So, ladies and gentlemen, once a person buy into this MAGS, this Magnificent 7 ETF, once you buy into this ETF, you are automatically buying into the 7 stock of Apple, Microsoft, Google, Amazon, Nvidia, Meta, and Tesla. Let's look at the chart of MAGS next. So, ladies and gentlemen, this is a chart of MAGS, the Magnificent 7 ETF. Look at it. Is blue 50-day moving average, is orange 100-day moving average, is 200-day red color moving average, all still turning up, uptrending and going up. This is a sign of bullishness of this ETF. Also, it has undergone some correction right now. So can you see the top blue horizontal line? That should provide some good support for MAGS. Or if the market continue to weaken, we may see this support broken, and then there's going to be another strong support at around 50, around over here. Can you look at the lower blue horizontal support line? This is where is orange 100-day moving average is also. Also, watch out for this first, the top one, the blue horizontal support line, which is where is 50-day moving average is. There's a double support there. All right. So if this support cannot hold, then we may just see MAGS come down to the second support, double support, which is the 100-day moving averages. Also, if you are looking at participating in the Magnificent 7, but you don't want to buy into individual 7 of them, you can buy into collective of them in this Magnificent 7 ETF, ticker symbol MAGS. All right. So that's that. Next. Yes. When we talk about AI, we definitely have to talk about this stock called Pte Ltd. Ticker symbol is PLTR. So after Nvidia, this is the next AI darling. Let's look at its chart. It was listed, all right, in year 2020, around September, I think. Look at the chart. Or you in 2021, 22, 22, you go through a correction, but after that, can you see it has been going up and up and up? Because I would say this is one of the pure AI play. Or Palantir is really making money from AI application. Right? Let's zoom in into Palantir. Next chart. Look at the chart of Palantir. It has been going up and up. Look at the 50-day, 100-day, 200-day moving average, all trending up. This is a sign of a bullishness. But the good thing is, along the way up, we have no chance to buy. But look at where the price is corrected, and it's probably near to a support. The top blue horizontal support line is. That's where the 50-day moving average is. If that's the support, if that is the support, if Palantir finds support around there, then we may see Palantir continue to go up as they ride on this AI mega trend. But if this, let's say, US stock market continue to weaken, and this top upper blue horizontal support line doesn't hold, or then we can look at the uptrending, the blue uptrending so-called support line, which is where is 100-day moving average support is. All right. So ladies and gentlemen, look below. Its RSI has gone below 50, closing in to oversold. So whoever no chance to buy, as it go up on the way up, the price has corrected quite a fair bit. All right, so let's see this top support at the 50-day moving average, whether it can provide any form of support. But definitely, it has gone below 50 for its RSI. If we continue weaken, then we may go into oversold situation. Then we may be able to participate. For those who haven't participated, you may be able to participate in Palantir at a much lower price. But this is definitely a very nice chart. But now is probably giving us an opportunity to enter at a much lower price. Also, let's watch out for these two support level. All right. So next, so I talked about stocks. Probably one area. Oh yeah, for those who are interested in so-called AI, you say I don't want to buy into all these. There's actually all these individual AI stock. There's actually an ETF for AI. It's called Global X Artificial Intelligence and Technology ETF. Symbol is AIQ. You buy into this ETF, which consists of AI stocks. You can also ride on the AI mega trend. Let's look at the chart next. Also very nice uptrending. Can you see? So now it has corrected together with the general US stock market. Is probably trying to find support at the top horizontal blue support line. If that top horizontal support line doesn't hold, or we may see AIQ drop to a lower level, that means its RSI may drop into oversold situation. So if this current support, which is it is right now, doesn't hold, we may see AIQ drop to another double support. That means the lower blue horizontal support line, which is where is orange 100-day moving average is. If that would happen, its RSI probably will drop into oversold level. Or we may have a chance to enter AIQ at the lower price then. Also, for those who are interested in the AI trend, but don't want to buy into AI stock, don't want to buy into AI, the Magnificent Seven, or probably AIQ. Can we just go back to the previous slide? The round hill, not round hill, the global, no, sorry, next. The Global X Artificial Intelligence and Technology ETF, ticker symbol AIQ, may be something you can look at. All right, next. So apart from stock, ladies and gentlemen, next, there's one particular sector that I think will do well, which is gold. Because I mean, we can all see that political tension is building up. Also, gold is a good hedge against geopolitical tension. All right, so let's look at if you want to participate in gold through the US stock market, one of the way is next, you can participate through this next ETF called SPDR Gold Share. The ticker symbol is GLD. Also, ladies and gentlemen, so we can see that recently gold price has corrected to the so-called the blue uptrending support line. Or you find support at the blue uptrending support line as well as its orange EMA of 100-day. Also, I think going forward, gold price should benefit from the geopolitical tension, or it should be going higher to challenge its high, which is in August. So next, I think everyone should have some gold in our portfolio. All right, because this geopolitical tension is probably going to get worse. In fact, this year I think something is going to happen at the South China Sea. You know, China may take some action against Taiwan. I don't know. So if that were to happen, then we may see gold price continue to trend higher. Can we just go back previously? Gold price has trend higher. Last year, gold price has. Can we go back to the previous slide? Last year itself, gold price has. No. Yeah. Last year itself, gold. Next slide. Yes. Last year itself, gold price has gone up 20+%. because of a geopolitical tension, especially in the Middle East and even Ukraine, Russia. And after that, towards November last year, it corrected, right? But if something were to happen in the South China Sea, we probably will see gold price continue to go higher from here. So I think next, we should all have some gold as protection next, all right, in our portfolio. All right. So now, lastly, I've shared about some of the sector and gold that we probably can look at to ride on the last leg of this US bull market. Then maybe I know some of you guys over here are new. You have been playing, let's say, for example, Malaysia stock all your life until now. Ladies and gentlemen, I think uh, like what I shared earlier, I think I shared, right? KLCI doesn't look too promising. It has been coming down quite a bit. The next support, he has broken the 200-day moving average, in case you all don't know. And it has a dead cross already. That means it's 50-day moving average already crossed below its 200-day moving average. These are bearish signs. Also, the thing is, for KLCI, I'm looking at the next support probably around 1530. So if I'm just saying, if Malaysia market doesn't do well, then probably US market is the one that probably you can turn your attention to, especially right now when Philip provide this trading of US stock with a commission as low as 0.02%. All right, then you say, Derek, I've never participated in US stock before. Don't worry. Now I'm going to show you guys a very, very simple way how to beat 94% of the active professional fund manager out there. 94%. A lot of professional fund manager actually they don't make money for their client because they cannot beat S&P 500. So how to beat them? Next slide. Next. This will show 94% of active fund manager cannot beat the market. Even Warren Buffett, Berkshire Hathaway has underperformed S&P 500 over a 20-year period. So even the god of investment, Warren Buffett, Berkshire Hathaway, also underperformed S&P 500 over a 20-year period. Now what can we do? We as normal people, how can we then beat 94% of this fund manager? This is from the word of Warren Buffett. Next. Next. Warren Buffett say this. Warren Buffett say one, not I say one. He say, in my view, for most people, the best thing to do is to own the S&P 500 index fund. People will try and sell you other things because there are more money in it for them if they do. From the mouth of Warren Buffett, he say the best thing is to own the S&P 500 index fund. Then that means you buy into, example, next, you buy into ETF that track S&P 500. For example, these are two ETF that track S&P 500. The first one is called SPDR S&P 500 ETF, or the ticker symbol is SPY. Or the second one is called Vanguard S&P 500 ETF. The ticker symbol is VOO. So when you buy into either of these ETF, you are actually tracking S&P 500, which is one of the indexes of US stock market. So ladies and gentlemen, remember earlier I mentioned 94% of the fund manager cannot beat S&P 500. So why you give your money to them? So you might as well just buy into SPY and VOO, which track the S&P 500. Ladies and gentlemen, this is from the word of Warren Buffett. But this is for those, especially you no time to watch the market because every day you are busy working. So, but to do this, there's two criteria. Next. First, you have to do it regularly. That means you, for example, you do it every month. You do this thing called dollar cost averaging. That means, for example, every middle of the month, you just put a certain amount of money which you are comfortable into SPY or VOO. You just treat it like saving money. So instead of that means your salary come in. You don't save money inside your bank account. You save your money into SPY or VOO. You treat it like saving money. You have to do it regularly. Number two, you have to do it consistently, regardless whether bull or bear market. Don't do this. Wow, initially you save or you invest into SPY or VOO regularly. After that, bear market coming, you stop. No, these are the two criteria. You have to do it regularly. You have to do it consistently. Next, let me show you the chart of S&P 500. This is a chart of S&P 500 since 1928 until now, almost 100 years. Can you see over a long term, S&P 500 is in an uptrend. Over a long term. Yes, in between there are bear market. Like you see in year 2000, 2008, there's a 50% bear market. But remember, uh, go back to a previous chart slide. We have to do it regularly and consistently, regardless of bull and bear. You treat it like saving money every month, every month. And this is what, let me show you next. Next. This is the annualized return of S&P 500 through 2024 last year. Can you see the most right column? That is the result since 1928. The annualized return is about 9.8%. So if you do it for 70 years, it's 11%. Then you go to the furthest left. For 5 years, it's 15.5%. So can you see on average, it's about 10%. So I can tell you, the annualized return for S&P 500 since 1928 is about 10%, around 10%. Also, can we go back to a previous slide of Warren Buffett? Warren Buffett. Yes, that's why he say, in his view, for most people, if you don't have time to play the Magnificent Seven, play Pte Ltd, the easiest way, the best thing to do is to own S&P 500 regularly, put in money, and do it consistently, regardless of bull or bear market. Next. Next. This is a chart. Because annualized is 10%. But remember, you have to do it regularly and consistently. Finally, next chart. This is the win rate by holding period. Or if you look at the most left, daily, that means let's say tonight you buy, your winning rate is probably 54%. But if you look monthly, 1 year, 2 year, 3 year, until the 12th year, if you can consistently, regularly buy, consistently read bear or bull market, or you consistently buy into SPY or VOO, by the 12th year onward, your winning rate is 100%. So this to me, if you do it regularly and consistently, you can beat 94% of the active fund manager that you don't need to pay them so high management fee, all this thing. But you have to be consistent, and you have to do it regularly. Just like instead of saving money, you save your money in buying VOO or SPY. So this is the easiest way to start off in the US stock market if you are new to it. Or to find out more about VOO or SPY, you can look for the so-called the licensed dealer or reminder from Philip to assist you. All right. So I finished what I'm going to share tonight. All right. So probably next. For those who want to follow me, this is my Facebook page. You can follow me in Derick Tan. I have a Facebook page. All right. Next. Now is the time for Q&A. All right. So I'll pass the time back to Jun Hong.
Okay, thanks, Mr. Derek, for your insightful sharing. Okay, so I have a lot of questions here. Okay, so let me just filter out a little bit, then I will just read out the question, then you see if you can answer.
Sure.
Okay. Any indicator of 1 month in 2025? You think the S&P 500 will top at 6150? Do you think there is bear market will happen in the first half 2025 or second half?
Sorry, I cannot hear you clearly. Can you repeat the question again?
Never mind. This one I just send it to you. You see on your screen on the right top corner question.
Right, top right corner.
Yeah, the fourth logo.
Oh, okay. Which question is it?
Yep, you can just choose which question.
Oh, so these are all the questions. So I can
Yeah,
choose.
yes.
Oh, there's a why Chan say, is it too early to invest in a quantum computing? Well, according to so-called Jensen Huang, the CEO of NVIDIA, he say we probably are between 10 to 20 years ahead. So, so to me is probably we are a bit too early. So how about the then there's Yu Yu. How about QQQ? Is it good to this year? I mean, uh, for those who are so-called interested in the technological sector, QQQ is actually something we can look at to do this year. In fact, just to let you guys know, I personally, even though I'm 26 years into a market, I do DCA for both VOO and QQQ. I do it every month. I just share with you all every middle of the month, like today, I think tonight, I already put my money in, they will deduct so-called automatically every month. So I myself is doing VOO and QQQ myself. All right, so the Stanley, he says, what is your view on Bitcoin now? Uh, I don't think the bull market in Bitcoin is over. All right, so probably it's going through a correction right now, but after that, probably everyone is waiting for 20th of January because the swanning in of the who Donald Trump, who is very crypto friendly, and probably on the first day he may just say, "Oh, we are going to set up the strategic Bitcoin reserve." So to me, my personal view is, I don't think the bull market in Bitcoin is over. Just like the US stock market, we probably will have one more leg up in Bitcoin before this bull market in Bitcoin or the crypto is over. There's a Kong CK say Manifest 7 is all overpriced. Ladies and gentlemen, no, I don't disagree. Maybe in terms of valuation is overpriced. But the thing is, when we are in the last leg of the bull market, what appear overpriced can get even higher in price. Or the whole thing is about not being the last one to hold on to the stock when it's over. That's my take. Which I agree. The valuation looks high for this Magnificent Seven. But the thing is, if you have a choice between stocks is downtrending and stock is uptrending, for me, I will still participate in a stock that's uptrending because we are probably into a last leg already. We should not be buying into downtrending stock, or we should not try to look for value because we are probably into a last leg. That's my take. All right.
Okay, maybe you go with the last question here.
Is this the one what any indicator of what month in 2025 you think S&P will top? Is that the last question?
Yep, we can just
Okay.
take the last question.
Yeah. I can only say I expect probably this correction as of now. If you look at the market, Dow Zone future is up 600 plus point because tonight the the banks are announcing their result, which is very good. So we are going through a bounce. Also, market is trying to find its footing. So for me, is I'm looking at probably first quarter, or we probably will try to find a support. Then after that, we should go into the last day of the bull market. All right, then this bull market probably will continue until probably the third quarter. Then we will probably go through a topping process. Ladies and gentlemen, after it reaches its peak, doesn't mean straight away it will go into a bear market because topping is a process. It doesn't go to a peak, then straight away crash. No. Topping is a process. So probably we are looking at a high, probably in third quarter, then we'll go through a so-called a topping process, but we may not have a so-called year-end rally this year. Or in fact, if you look, uh, can we go back to my slide? After this Q&A, the next slide.
Yep.
Yeah, this is my timing and yield proprietary relative risk index. I briefly explain. Red zone means danger. Orange zone means less danger than red zone. Green zone means you can say it's oversold. Also, this is my proprietary tool. This is the monthly chart of my TNY relative risk index since 1999 until December 2024. All right, so at this point of time, can you see the black line, which is my RI, the short form for relative risk index, is actually at the orange zone. We have not gone into the red zone yet. Red zone means ding, 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 red alert. It's just like driving car. Once you see red light, you should stop, right? Now we are seeing orange light. We are not red light yet. So that's why to me is this bull market is not over. Probably later on, as it embark its last leg up, then my RI, which measure the risk level of the US stock market, when it go into the red zone, that is where we need to start to get worried. But we are not there yet. Also, so that's why I say we're probably going into a last leg. We probably will have one last leg before this bull market is finally over. That's my take. All right. Okay. So lastly, uh, I think we have almost come to the end of this webinar. Just to check, have you all learned something tonight? If you don't mind, can you just key somewhere so that I can see have you all learned something tonight?
Yep,
Also,
I think
uh,
everyone thumbs up.
yeah, all right. So thank you very much, ladies and gentlemen. So please take whatever I shared and go and do further research and analysis. Or don't worry, I think we'll still have another webinar, right, Jun Hong, in I think on the 19th of February. Am I correct?
Yes,
Yeah.
correct.
So don't worry. Uh, we'll have another webinar. I'll have another sharing with you guys again on the US stock market on the 19th of February. Please join us then. So if not, I wish you all, timing is everything. I wish you all a very happy Chinese New Year. For those who haven't opened a Philip account, probably you can open one with Philip, which is offering a very low 0.02% commission for US stock market. And it is a very stable broking house because I myself have been using it for the last 26 years, and it has been around in Singapore at least for the last 50 years. All right. So thank you very much, ladies and gentlemen. So back to you, Jun Hong.
Okay. Thank you, Mr. Derek. I think it's a very insightful sharing from you. Okay, maybe you can just try to off your mic for a little bit because
Okay.
I'm getting a call here. Yeah, sorry. Yep. Okay. So just a quick closing from me. Thanks everyone for attending this webinar again. So just a quick one. As what Mr. Derek mentioned just now, you can trade US stock at Philip at 0.02%. So the minimum fee is only USD 1.99. Okay, so for the next one, this one I think is better if you guys can scan right now. I think we extended the campaign period for early bird entry today until 10:15. So by end 10:15 you won't be able to access anymore. Okay, so to screenshot this slide, I'll give you guys 20 seconds to actually screenshot this, then you can entry and win the Apple products here. Okay, so just a quick 20 second. Okay. Yep. So I'll move on with the last one. Okay. So if you want to connect with us, you can connect with us on Facebook, YouTube, Telegram, LinkedIn, and TikTok. So this will be our major social media that we will be sharing insight and upcoming webinar and even seminar. Okay, so this will be our branches contacts and email. I think it would be nice that if you can screenshot this. If you have any question, you can go to your nearest branches across Malaysia. Okay, so a quick one. So last 10 seconds to screenshot. Yep, I think that's all from me. Thank you, Mr. Derek, again. So I will just end the call from here. That will be it for today. Thanks everyone for attending. Thanks a lot.
Thank you. Happy Chinese
Okay,
New Year. Bye bye.
bye bye.